let's kick off with Innovator ETFs head of research and investment strategy, Tim Urbanowicz. Tim, it's great to have you on the show. We did have a mixed session. The NASDAQ and Russell 2000 finishing the day lower. The NASDAQ just above the flat line, 59.85, it looks like where we're settling out. And the Dow also fractionally higher here. Given the rally we've seen in stocks over the past, call it, week, what do you like here?
Well, Morgan, what we're encouraging our clients to focus on are these election results. I think we're going to continue to be an election-driven market here. And specifically, we want to focus on these policies that we think have the best chance of actually being implemented right away. So we think immigration, we think tariffs on China, regulatory rollback. Those are the ones that are likely going in right out of the gates. And focus less on some of the things that might be more challenging to pass, where you're going to need to get the votes in Congress, i.e. the tax cuts on the corporate side as well as the individual side. And Morgan, when we take a step back, I think from a macro perspective, we see this as a boon for the economy overall. We see market breadth improving, stronger dollar, higher interest rates, and continued dominance of the U.S. versus the rest of the world. But we also want to be cautious on the micro level of some of these stocks that might be impacted by the tariff, specifically on China. I think of an Apple, something like Five Below, where they rely heavily on those imports. That's going to hurt the value proposition. And on the flip side, we want to lean into some of these names. They're going to benefit from the regulatory rollback. So we think specifically of financials and regional banks should be very well positioned. Same thing as oil and gas companies like ExxonMobil. Very well positioned, given the policies that are very likely to be enacted right out of the gates.
Okay, I want to bring Mike Santolian into this conversation as well. Mike, how much are equities now taking their cue from the bond market, especially since we saw a CPI report that was largely in line with expectations, and we've continued to get Fed speak. We got Powell tomorrow, but ahead of that, I would say a little more caution, perhaps, in some of the officials that we have heard from.
Yeah, there is caution. I think there's obviously you sort of don't want to over-anticipate the policy implications, but you can just simply look at how the bond market is repriced. The CPI was okay. I think if it was really a downside surprise to inflation, you might have had a better bid in treasuries. As it was, we got steadiness. So, yeah, the equity market is trying to figure out at what level of real interest rates becomes a little bit of a pinch on equity valuations. We're not really there, especially when you can sort of have a little bit of the blessing of anticipated policy help that's going to allow people maybe to keep the market on a little bit of a longer leash. But I do think that in the short term, when you have parts of the market that got really overheated in a hurry, you definitely might use the bond market as an excuse to just back off a little bit.
Okay, we've got our first earnings report, and we're going to get to that right now. Ibata, third quarter results. The company beating on earnings at 51 cents per share. That's versus estimates of 35 cents. Revenue also coming in ahead of expectations at $98.6 million. That was versus $94.1 million expected by the street. That was up 16% versus last year. The company projecting fourth quarter revenue of between $100 and $106 million. It's a bit shy of estimates of $110 million. You can see shares are down about 4% right now, but we will be joined by CEO Brian Leach to discuss those results before he dials into the analyst call that's coming up in just a few moments. And Tim, I'm going to go right there with you because you just touched on some of the retail stocks and consumer names. It really feels like, particularly in this hour of earnings, that the focus is going to be on the latest around AI and the latest around consumer. We just got that first read on the consumer, if you will, through Ibata.
Yeah, Ibata's an interesting one here, Morgan, and I think we probably go a little bit against the consensus here. I don't think there's an analyst on the street that has a price target lower than where the stock's trading right now. It's encouraging to see the growth, but what I struggle with long term with this stock is really what's any different from this being very close to Groupon and some of the struggles that they had. Yeah, it's a digital version, but what's the consumer retention look like for the companies that are spending money with them? What's the barriers to entry look like? So I think we're a little bit less optimistic there than the consensus is overall. And then when we look at the market as a whole, I think we're looking for signs that really justify some of the pops that we've seen here recently, specifically in small caps. Right now, we have small caps that have completely disconnected from earnings expectations. We saw the 27th best ever move in the Russell 2000 the day after the election, and earnings expectations have actually come down since. So we need to see those earnings expectations start to follow suit and come up a little bit. We want to see small business confidence increase. We want to see PMIs increasing. If we see those fall into place, I think that gives us a lot more confidence that this rally in small caps can be sustained.
Okay, a little caution there.